And good morning, everyone. Welcome back to NeelyFX. My name is Michael Neely, and this is the channel where I talk about foreign exchange trading, prop firm trading, and hopefully making money doing all those things. It's time for my daily update again on Thursday, February the 26th, and let's go ahead and get into some stuff. Lots of exciting stuff to talk about today. Let's get into the risk disclaimers. We're going to be talking about risk and putting money at risk. This also means that we need to talk about I need to disclose this to you. So here we go. I should call this risk disclosure. Oh well. It goes something like this. This channel is for educational and entertainment purposes only and does not constitute trading or financial advice. I'm a professional trader, not a broker, trading my own capital. I do not solicit funds, manage client accounts, nor do I hold CFTC or NFA registration at this time. I have held NFA registration in the past, about 25 years ago. Forex trading is highly speculative with a high risk of losing some or all of your investment capital. Only trade with funds you can comfortably afford to lose. And here's the CFTC risk disclosure. Forex trading carries a higher degree of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before trading Forex, consider your investment objectives, experience, and risk appetite. You could sustain a loss of some or all of your investment capital. Now, the important thing is we're not doing this to lose money, we're doing this to make money. So let's go ahead and get into some things for today. First, let's do this. We have the riskometer there. Well, we have the riskometer in just a second because I want to bring up Forex Factory first. Had to shut down my computer again, so whoops, that's not how you spell it. I have to set up all my screens again. And sometimes I forget one. Okay, so here is Forex Factory. Not a whole lot of risk to talk about today. We've got Japanese inflation numbers coming out later on today. It looks like it's expected to fall too, which makes it interesting, which means we are entering a deflationary period. Hopefully government will quit stealing money from everybody. I got jokes. It's not going to happen. But at any rate, hopefully the government spending will not be increasing the inflation rates around the world, which is what has happened after the period of COVID. COVID opened up the world for everyone to turn their budgets, for every government in the world to turn their budgets from billions into trillions to chase something that didn't really exist. That's my opinion. That's not, don't really go after me, don't really post that, but at any rate, that's what I think. But we've got Japanese CPI coming out at 6:30. That'll be in play if you're considering the yen trades like I do. The yen trades, of course, the yen is on top today. So number one, followed by the U.S. dollar, and Great British Pound is way down here. So we're going to see a decline in the GJ, which is fine. The riskometer is risk on. So we're looking at increased stocks. There's got a lot of money leaving the the yen crosses. Those are more flight to safety type trades, and the stock market will be going up. But look at that, it's marginally down. Why? I'm not sure. Oh, Nvidia and Salesforce earnings, huh? Oh, Salesforce earnings must have come out yesterday, so that means software is probably going to get hacked up today, which is fine too. Let's get into this. Let's get into what we do, which is currencies. Let's start with. Just want to scan the bonds real quick. Looks like they are all marginally either up or down. So let's go to the full chart of the DXY. We'll start here. You can do it. Okay. Just realized that what's chewing up a lot of memory on this machine is a Laravel project I'm building, which I don't have any other choice but to put it on the machine. I can't put it in the cloud because then GitHub does not deal with it well. Oh well, here we go. We have 97.73, kind of perking up a little bit on the daily chart. Well, it's a 4 hour. Let's get out on the daily. We don't actually trade the DXY, but the DXY does affect how we trade currencies. Kind of perking up a little bit off of a brief, I'm not going to call that a setback, call it entering a consolidation period, looking at these 5 or 6 days right here, right after this run. So we're looking at a possible turnaround period, or it's in a possible turnaround period right now, but it's got to go somewhere first. So with that, let's get into the pound euro versus the pound. Looks like the euro tried to come back a little bit, and they're going to be pretty much even. Euro versus the dollar, which is usually the inverse of the DXY. Again, if the DXY is not going anywhere, the euro versus the dollar, chances are not going. It's not going to go anywhere either, and it's 20 pips higher than it was yesterday when I did this video. So we're not going to talk about that. Not very exciting stuff there today. Dollar versus the yen. Again, not really exciting stuff right there. It's right at resistance or support, depending on which side of it goes on. It could be resistance. It could be resistance turned support. We need some activity going on there. It's stuck at 156 right now, which is the turnaround point on that, which is the decision-making point for the UJ. We're also going to see if it gets back under this trend line, or whether this trend line is going to turn into a support line. So that'll be very interesting. We're not there yet. I'd love to be in the office all day to check that out. I won't be, but I'd love to be. Pound versus the dollar is quite at a period of resistance also, or support, depending on how you look at it. It's right at a tipping point, if you will. Not a major tipping point, just a tipping point to see how, if you wanted to get a trade in today, that would be the one to look at. This is the one I'm looking at. Pound versus the yen. I am in at, where am I? One trade stayed in there yesterday. There's also something else interesting happened yesterday too. In my personal accounts, I had I trade on commission on this one. I just pay the commission after the trade. On my personal accounts, I play the spread. And when at 5 o'clock, the spread gets ultra wide. It could be 20 pips, could be 30 pips, could be 40 pips. And when you've got a spread like that, you're going to get trades activated that you didn't want activated. So, and would not have been activated under normal circumstances. So with that, you want to, if you're trading the spread, you want to make sure that your trades are either you pull a stop loss for the hour or two that it's going to be meandering and the spreads are going to get really wide, while the currencies of the central banks of the world recalculate everything, or close your trades out. So it's going to be up to you. But those trades were activated, and I ended up taking a loss on them. A small loss, but but I'm trying to avoid losses. I think everybody is. So let's go back over here again. I'm in. Oh yeah, I'm in at 211.35, possibly the buy stop. If it keeps going down, it will not be triggered, but it'll be triggered later, maybe. If it turns around, when it turns around, if it turns around. Euro versus the yen. It's right there. Hold on for just a second. All right, the euro versus the yen. Sorry, I had to get some more coffee. I do love coffee. At any rate, do that too. We have the EJ, euro versus the yen. Again, pulling back about the same way the pound versus the yen did. Canadian. It's a tough nut to crack if you trade this one. Seeing a lot of selling pressure right here. Some selling pressure. You can also see a doji right there. If that continues, then that'll be a reversal. However, I would not jump into this trade at all. There's just not a whole lot of things going on with it. CAD versus the yen, again pulling back, just like the rest of the yen trades are. This is looking like it could go further south a little bit, possibly down 113.50 to give you a 50 pip trade. If you're so inclined to take that one, I'm not. I like the GJ, and I'm not buying. I'm not doing a sell on any of the yen trades because of if I have to carry it over one day, then it's a liability. Liabilities are bad, by the way. So here we go. We have the oil, CL1. That's the newest, the most upcoming, most recent, most how do I put it? The closest to expiration contract on the NYMEX. And a lot of people use West Texas index. I can't find a reliable indicator on that for in TradingView. If you know one, let me know. It's down $1, so it's kind of pulling back a little bit due to geo tensions possibly easing. Who knows? Maybe we're not going to bomb Iran. Logistics on bombing Iran away, by the way, are really expensive. It's really hard to do. They're really far away. Anyway, we have the Euro, Aussie versus the dollar. It surged yesterday. Now it's kind of finding meandering around 71.20. So I'm not sure if it's going to consolidate there, or if we're actually going to get it seeing it higher. It finally got a daily close above the 2023 weekly high close, but there's still not enough momentum to really get me interested in it. Gold's pulling back, kind of meandering a little bit, consolidating around 51.77. Might see a push a little bit later through 52. Platinum kind of pulling back a little bit. Palladium also pulled back a little bit, and would expect to pull back in silver. There's also a lot of speculation that the drug cartel activity, particularly around Puerto Vallarta, has disrupted the silver distribution to CME, and that's why they halted trading yesterday, is because they're running out of supply. So if that's the case, it should be going through the roof. But I think they're also trying to get rid of trying to dump some cells. But it seemed to protect the 91 mark really, really well. That the powers that be, being the CME, do not want to see silver over 91. There's already speculation of a big silver crunch coming, and we'll see if that actually happens. And software stocks were up yesterday. Maybe they're going to start taking care of the customers again. Who knows? But at any rate, that's all I've got for now. If you like this video, then by all means hit the thumbs up. If you want to see more of these videos, then subscribe to the channel. And if you want to talk to me directly, the best way to do that is to comment in the comment section, and I'll get back with you as soon as I can. So that's all I've got for today. Happy trading. You guys have a great one. Talk to you later. Bye.